What is going on, ladies and gentlemen? We are back with another video, and in this video I'm going to be going over an updated daily bias video. Since I've traded for like 4, 5, 6 years now, it's like 6 I think, but the more experience I get, the easier I can explain these things. So this is just going to be straight up example of how I find my bias. Okay, I'm gonna get right into it, no BS. Let's go. All right, first things first, I start with the daily time frame. That's how I do it. I just start with the daily time frame. And now the only thing I'm going to ask myself is there any obvious FEG on the daily time frame that I could use as a condition? By condition, I mean like support and resistance. So right here, is there any obvious fair value gap we can use for a condition? Well, not right here, but you know, the whole time you're holding this one. So I would say yes and no. Okay, now let's keep going. Right here, is there one we can use as a condition? Yes or no? Yes, there is. So, right, I'd be using this. Bullish if we hold it, bearish if we break it. And as you can see, the past couple of days, we actually broke it. So I am bearish, and we do have this LRLR in the lower time frame, or in the higher time frame. So I'm assuming we're going to run this at some point. But the first question I'm asking for is there an obvious fair value gap on the daily time frame? If there is, I'm going to be like, okay, well, I'll just use that for bias. Now, what if the answer is no? What if we're like right here and there's like, this is just chop? Well, then what do? I go to the lower time frame. I'm just going to go to the 4 hour at that point. And I'd be like, okay, I'm going to ask myself the same question. Is there an obvious fair value gap we could use for bias? I would say so. I would say this one right here. And this one right here. Okay, let's see what happens. Okay, so this 4 hour never gets closed above. Okay, closed above there. Okay, now I'm bullish, right? I'm bullish because it inverse. I'm bullish to the high. Okay, hit the high. Okay, cool. Another obvious one I would be like right here, right? So I'm just waiting for the obvious fair value gaps. Now let's say we're right here and there's no obvious fair value gaps. So then what do? I go to the lower time frame. Okay, let me check the 1 hour. Is there anything obvious? No, on the 1 hour there's nothing obvious here. There's no good gaps. Oh, what am I gonna do? I'm gonna go to the 15 minute. 15 minute is the lowest I will go for determining bias. Okay, just so you guys know, 15 minutes is the lowest I'll go. So 15 minute, I don't really see anything either right here. So obviously I'm just going to wait till the next day at that point. I'm not going to try to form a daily bias that day until we see a mega. Okay, right there, boom, obvious candle. See how this is an obvious fair value gap? Okay, so now I'm going to use this for bias. If we inverse it, bullish. If we hold it, bearish. Let's see what happens. Never inverse. Okay, inverse it, boom, bullish, right? So I'm waiting. Okay, look, new obvious fair value gap on the 15-minute time frame. So I'm generally just going to like the 1 hour, 15 minute, and 4 hour, and I'm just looking for those obvious gaps and seeing how I react. So 1 hour here. If we break it, bearish. Okay, boom, bearish. Right? If we break this to the upside, boom, bullish. And when you're bullish or bearish, there's gonna be so many 1 minute moves. Like I know it's like, oh, how do you just go from bearish to bullish there? There's going to be so many different 1 minute moves here, though, because we trade off the 1 and 5, right? So you're not going to be missing anything, okay? Okay, now I'm going to use this as a condition. If we hold it, bullish. If we break it, bearish. And you can actually see there's an actually more obvious gap here as well, so I'll draw that one too. Okay, boom, broke it. Now I'm bearish, right? Okay, broke it to the upside, bullish, right? I'm going to look for 1 minute long setups. Now, the question is, do we get 1 minute long setups while we're above it? Yeah, we do, right? We get a 1 minute inverse here, right? At that point, when we're above the hourly, we do get a long play here, right? We do get a couple longs. So just because the hourly candle goes down inside the zone where you're bullish in, doesn't mean you're going to lose plays, right? We're bearish and then bullish because it holds and then bearish again. And even though it ended up dumping after, we still got like some really nice long setups in here. Look at this one. See this inverse here? So like we're still getting nice long setups while we're inside it before it even breaks. Okay. Right. So now here I'd probably be bearish again. Right. And then, okay, now I'd use this. Cool. Right. So I'm literally just like waiting for these obvious gaps in the 15 minute, hourly, 4 hour. Right. I start with the daily. If none in the daily, I use the 4 hour. If none in the 4 hour, I go to the 1 hour. If none in the 1 hour, or I go to 1 hour. If none in the 1 hour, I go to the 15 minute. And that's the lowest I'll go for bias. Now, you're probably wondering, Well, what if there is a 4-hour, but there's a really obvious 15-minute too? Good question. I'm likely going to lean towards using the 15-minute because if I'm trading the 1-minute time frame, I like to pair the 1 and the 15. If I'm trading the 5-minute time frame, I like to pair the 5-minute and the 1 hour. So like if I'm trading the 1 minute, I do like using the 15. Like I do prefer that. Right? I don't like pairing the 1 minute with like the 4-hour candle. It's just so much. There's think about it. There's how many 1 minute candles are in 60 times 4, 240 minutes. 240 candles. That's way too many. Right? So I'm typically going to use like the 15-minute time frame if I'm trading the 1 minute time frame, but that's basically how I get my bias. I go to the 1 hour, I draw out obvious fair value gaps, and if there is none in any of those time frames, what does that tell you? That tells you don't trade the market or take longs and shorts, because both will probably work. Only when we have obvious fair value gaps to use, there's like zones to bounce and reject off of. That's the only time I'm like using these. So oftentimes I'm pretty patient, and if I don't see anything obvious, likely I won't trade, or likely I'll just scalp, or likely I'll just wait for these 1 minute little pattern plays like this. You know, what if I don't have a bias here, but I see this 1 minute long, I'll be like, yeah, okay, don't bias. Maybe I'll try it. Maybe I'll go to break even quickly, see what happens. You know, go break even here. So that's really what I do. It's not that hard. Moral of the story is go to the 4 hour, go to the daily, look for an obvious zone, draw it, use this as support and resistance depending on if we trade above it or below it, right? So 1 hour, okay, this is bearish until proven wrong. Okay, broke it. Okay, bullish until broken, right? If it's not obvious, don't draw it. I don't want to see you guys drawing these little ass gaps here. These just aren't as significant as these. These are the big ones. This one, right? This one is super obvious. I would say even this one. Like in this screenshot, I feel like I only see like 1, 2, I don't even know what this is, 3, 4, definitely 5 right here, right? So these are the zones we're trying to use, okay? Not those little tiny ones. These do not matter. I mean, they do, but they don't. They're just not as good for bias. So that's all I got for this video. Let me know if you guys have any questions. I like to keep it simple. You should keep it simple too if you want to be more profitable, because literally the most simple I've kept it in the past 3 years, the more profitable I've gotten. So it's up to you. Everyone trades different, but that's how I do it, and I've had a lot of success with it, obviously. So I'll see you guys in the next one. Don't forget to use code Dodgy for a discount on Apex. Link in description, and I'll see you guys later. Peace. And here are just some examples of a bunch of testimonials, a bunch of profits, and just a bunch of successful students where they put in the work and they become profitable. And, you know, all these guys are living the life that they want to live. So with that being said, here's just some examples. And if you are interested, I do upload on YouTube for free, but I did just start a one-on-one mentorship where it's very, very private, very personalized. It's got a lower acceptance rate than Harvard. I have denied a lot of people, but there's only, I think, 16 or 15 spots left at the moment. And my favorite part of the mentorship, which you can apply at the link below, by the way, is an accountability program. So basically what I did is I created this accountability journal, okay? And I put 4 students in a group, and I basically had them meet once a week where they are going to be accountable for their actions, show their P&L, and just overall make sure that they have partners to keep them in check. I also have a ton of quizzes and exams throughout a bunch of coursework, but that's pretty basic, even though a lot of other mentors don't do the quizzes and exams. And overall, I just get a call a lot, give some people my phone number if you really need it, and I'm very accessible, and I do 2 classes a week. So if you're interested, it's totally free to book a call. Just click the link in the description, and I hope I can see some of you. And for the ones who get denied, just remember, my YouTube is free. Okay, you don't need to pay me to become profitable. This is very private, and I'm upload videos for free for a reason. I don't want your money. Okay, but this is for people who are going to be dedicated, work extra hard, and people that I want to spend my time teaching who won't waste my time, that I know has a strong chance of becoming profitable. That's it for this video. Don't forget to use code Dodgy for an Apex account, and I'll see you guys in the next one. Peace.